Hi, welcome to the Active Value Investor channel. My name is Victor, and in this video, I'm going to be covering Archer-Daniels-Midland, referred to as ADM. This is a big food company that I've invested in. They've done well over the last year and over the last 5 years. I'd like to analyze the company and determine if I should buy additional shares, hold, or sell my shares. Let's take a closer look. I like to scorecard my investments, and it involves four key metrics. And then a fifth item is a decision whether I should buy more shares, hold, or sell. First, do I want to be a part of this industry? Second, is the company operating and performing well? Is debt less than 3 times EBITDA? And I want a discount on the stock. Those questions lead me to make the decision: should I buy additional shares, hold, or sell? So as mentioned, ADM is a very large food company. So a lot of the products you'd see in your grocery store or restaurant prepared food comes from ADM. They also create animal nutrition, so farmers could get their uh, their supplies of food for their animals, so that they can grow those and then take those to market. Over the last 5 years, ADM has done quite well, up 94%. And they've been paying a dividend. Right now, it's a little less than 2%. Over the last 12 months, they've also done well, up 23%. Meanwhile, the market has been pretty bad in 2022. Both the S&P and the NASDAQ were down quite a bit. Looking at the 1 month chart, the stock's down a little over 10%. So in a good quality company like this, it's good to monitor that so I could see when I can enter a position or add more shares if stock price is coming down, but all the fundamentals remain real positive. I value companies based on free cash flow. So what I've done is I've taken free cash flow for ADM for 2022. Only 9 months have been reported. So I took their free cash flow that's been reported through 3 quarters and annualized it, and I came up with 3.3 billion in free cash flow that I expect they're going to produce in 2022. That's going to be my starting point, and I'm going to grow free cash flow in years 2, 3, 4 by 6%, and then the perpetual growth will be 4%. The weighted average cost of capital is 9.5%. I get that from Finbox. So using that criteria, the valuation of ADM is 59.4 billion, but their market cap currently is 46.5 billion. So it offers up a small discount of 28%. One thing I wanted to highlight is debt to EBITDA ratio is very good. It's well under 3. It's at 1.38. So they could pay off all their debts in less than 2 years using EBITDA. So looking at the performance of the business year over year, if you look at the Q3 results, they grew revenue by 21%, which is great. And that's primarily due to food inflation. It's no secret, especially food is a big component of the high inflation that we've experienced. Their PE is really low at 11.7. They generated 3.3 billion in free cash flow 2022. If you annualize that figure, which produces about a 10% free cash flow yield. They pay a dividend of 1.89, guidance for 2023. So they grew very well in Q3, very profitable. I expect they're going to be generating free cash flow, and their CEO in their earnings call really came out and said that global demand remains robust for food, so they should continue to enjoy high profits, high cash flow in 2023. So just scorecarding ADM, it's an industry I want to be a part of. I want the stability. I want food companies, which are going to be demand well into the future. This company is operating and performing very well. Debt is way below 3 times EBITDA, and I get a discount on the stock. So I'm going to be buying additional shares of ADM and adding to my position. Thank you for watching my video. Appreciate it. Hope you found it interesting and learned a little bit about ADM. Keep in mind, I'm not recommending you buy ADM. I just like to record my experience as a small investor and pass it along to other investors on YouTube. Good luck investing in 2023.